Hey everyone, this is Elijah Johnson with FinanceandLiberty.com, and back with us today is Bo Polney from Gold2020Forecast.com. Bo, thank you so much for joining us today.
Elijah, thank you for having me back. It's great to speak with you again. Thank you.
All right, well, I'd first like to discuss a little bit about what you expect in 2016 for the gold market and the world stock markets. But first, would you like to discuss a little bit about, I know in our previous interviews, you've expected gold and silver to break out soon. Do you still believe this? And did you want to just give us an update on the precious metal markets?
Sure, absolutely. We are looking at two possibilities for gold, and when I say gold, I mean silver too, but the precious metals. Last year, there was a possibility last May into June that the metals were supposed to rally pretty aggressively. They'd started off and then they reversed. When a pattern like that reverses, it basically puts a 7 month, because everything rotates around a 7, so it put a 7 month wrench into the cycle, but it actually ends up playing out beautifully because now it's tying in incredibly with the world stock markets. But off that reversal, if it was to be a 7 month time window, that would have put in a cycle low on gold. The very, very first few days of December. And we did an interview at that time with Future Money Trends, specifically on December 3rd of 2015. And we stated on that interview that gold should be making its bottom today. And that interview, again, was on December 3rd. So looking at where we've gone since then, I'm 99.9, I'm almost 100% positive the bottom's in. So gold should have bottomed specifically on December 3rd at $1,045, and that would have been a 7 month cycle inversion, putting it to the exact date in December. Off that time point, we've seen the metals do nothing but go sideways, up and down, with each, and gold specifically, has been making higher lows. So each time it went down, it went higher. And so we had a low, I've got it here in front of me, in early December. And in the middle of December, we had a secondary double bottom. And it was just a few cents higher than a December low. And then at the end of December, again, a higher low. And then in the middle of January, a higher low. So gold and silver are set to have some incredible moves this year, as the world economy has its massive and major problems. So that's where we're at. I expect incredible moves for gold and for silver. The last conference we did was in Vancouver, and that was the Cambridge House. And we did a presentation there. That presentation we did actually turn into YouTube. It's available online. And in that presentation that we did on the 24th, we were expecting gold and silver to break out at the very, very end of January. And lo and behold, I think we can all look at the price of gold and silver. We've got an incredible start here of what I think is about to be pretty unbelievably amazing and exciting. So I think that's a good place to start, or you tell me.
Definitely, and I saw that you're basically saying that at least for a time there will be no offer price for gold and silver. Is that correct?
I do believe that's coming this year, yes. I believe that is going to be an incredible event when it happens. I believe it's going to be dollar related. The interview that, again, we did with Future Money Trends, I'm not sure when our last interview was, but I think we may have spoken about the dollar. But I know that we did say specifically, and also in an interview we did in January, the very, very first week of January with Jeff Berwick, we were basically saying the U.S. dollar, it broke down on the day that gold bottomed. So it was on that 3rd of December, the dollar. It was, I think Europe made an announcement. Euro jumped up, the dollar dropped down, and since that was a descending. It was an ascending wedge on the dollar and a descending wedge on gold and silver and the euro. And since then, we've been expecting the dollar to fall. And if you notice yesterday, And again, today is the February 4th. And yesterday on February 3rd, the US dollar broke and it went deeper. So it made a lower low below the December low. So with December low now being broken on the dollar, and the world and the US stock markets like the S&P have also gone deeper and below the December lows. Those are bearish cycles now. And so I believe, this is really where we're headed here, is in this year, all supports are going to start breaking terribly. And as they break to the downside, the dollar will move with the equity markets, the stock markets. And it's going to cause a break in the one key thing that's been holding up the world markets, and that's faith and confidence. When that breaks, I believe the world is going to flee to precious metals, gold and silver. And when it goes no offer, that means that no one's willing to sell it. So that's what I believe is coming this year.
Now, you talked a little bit about the stock markets, and in the past you've said that this coming stock market crash will be the crash of the century. Now, I recently watched one of your videos that you put out, and you were talking about how one of the signs that we're going to have this crash is that ever since 2008, the stock market has never actually gone above the support line. Did you want to discuss a little bit about this?
That's yes, please. That's great. I actually sent you that slide. If you could post it, I think it'll be very illustrative for the viewers and the listeners. But that chart's got a picture of Humpty Dumpty on it. And basically, I illustrate him as faith and confidence. And so what happened was, this chart that I've sent you goes back to 1981. You can go back, another 100 years if you wanted to. It's the same chart, just the same line. The bottom line was that line broke in the crash of 2008. And so it went below support. And now, since 2008 and into 2009 low, the U.S. market, and this is the chart that we're looking at here, is the S&P 500. The S&P 500 has been trading underneath that support line. So actually that support line is not a support line, it's a resistance line. So once you break a line, that line that was support becomes resistance. And so since the year 2009 and the break in 2008, the U.S. markets failed to rally up above the support line, and they've been underneath the support line, so they've been actually in resistance. The line has become resistance, and the time is up. The pattern is complete, and following this, we have a down cycle. I also sent you a second slide, if we can look at that one, and that slide is it's a 777 cycle timing. But it's quite fascinating, and there's actually 3 slides associated with that one. But this is pretty important to understand here, because it's going to take into account the long-term cycle going back to 1981 that I just sent, or that we're talking about. But from the year 2000, and let's do the date here. So March 24th of the year 2000, you do a calculator on it, and you run 7 years, 7 months, 7 days. And it's incredible. But that was from the March 24th top. It comes out to the precise, not even like a few days off or a week or a month off. No, it's the exact day. 7 years, 7 months, 7 days. We get a top on October 31st, 2007. Okay. Well, and from that cycle, that's when it crashed and we got underneath support. And since then, the U.S. markets have been trading under that support line, which we just spoke about on the S&P. Well, then it's the second slide we go to. So now we're going to go from that date that we had of October 31st, 2007. Now we're going to add 7 years, 7 months, 7 weeks. So again, add a 777 or a 21 cycle. And what ends up happening is that, lo and behold, we arrive at July 20th, 2015. Okay, so that was the first Monday. That was actually a Monday. And that was the exact day that the S&P topped. We did an interview on that exact date intentionally with True News, and we stated on that interview that from this day it's over. And the world markets have done nothing but lower low, lower high, lower high, lower high ever since that date. And now we got lower lows, lower lows, lower lows. So that's a complete bear trend. So we've got like then there's a last chart that I sent you, which is basically goes back to the year 1999, and it basically illustrates how perfect the patterns are. But the timing's finished. There's no time to the upside. It's never gotten on this upcycle since 2009. It never got back up over the support line, and it's been sitting, and the support's been resistance, and now it's about to crash. So the year 2016 completes that cycle, and it ends up with a terrible crash.
Now, turning back to gold, do you think the gold and silver markets have bottomed?
Well, yeah, like I was saying earlier, we had a day when we did an interview. Specifically, we intentionally did the interview on the 3rd of December, saying that the cycle low on gold is here today, and it did. It was at $1,045. That nailed the exact day. Just same example of the 20th of July of 2015 for the world markets, but on that date, the December 3rd at $1,045, gold should have made a bottom. Usually silver bottoms second, so gold bottom first, which it did, and then silver bottom second, which it did 2 weeks later in the middle of December. And since then, both are in uptrends. And so, yes, the markets, gold and silver, have bottomed. And then lastly, just want to bring up, in case the listeners are interested in the mining stocks, but we did an interview when we were in Vancouver, and this was 2 days after it occurred, but basically that Monday on the 24th of January, we're basically saying in the interview that the mining stocks bottom specifically on the 20th. Based on our day counts or our cycles. And so we should have had a low on the mining stocks come in exactly on January 19th through the 20th. And if you look at the mining stocks, they're going to be pretty exciting starting now here.
So in the video you posted, you talked about how this whole cycle really is an illustration of the concept that gold is money, and that it's really just, this whole cycle is really based on gold coming back into the monetary realm, basically, and being seen again as money. Did you want to discuss a little bit about this?
Yeah, that's great. You have to go back historically. If you study history, you'll come to realize that there is only one currency, or there's one item that's ever been around that's been money, and it's gold. It's gold and silver. Gold was the money of kings, silver was the money of people, but it's basically those two items have been money since day one. And the cycle work that I illustrate, it goes back to the Currency Act, basically of 252 years ago. Now, the problem with that is it's just, how many generations have you had since the year since 1764? And the world, through time, they forget that gold is money because they've had the concept of currency introduced to them. And, and all the family members, it's just been going on for how many generations now. And so they've come to realize that paper is money, but it's not. But it's been a long cycle. And that cycle is supposed to complete this year. So believe it or not, people are going to very soon realize, the ones that believe in paper are going to come to realize that paper is paper, and gold and silver are money, and they're going to reposition themselves, and they're going to shoot up in price because the system that we've been taught to believe, it's going to crack. And there's going to be a break in that faith and confidence, and that's going to be the trigger for gold and silver.
Now, you've talked about how in the gold market, 300 ounces of paper gold have been sold for each 1 ounce of physical gold. How does this play in with gold breaking out?
Well, the best answer, the best way to state is nothing is forever. And so if you have an ounce of gold physical and you do a paper short against it, you create paper money. And they can then do it multiplied by 10, by 20, so you can do, and so that number can keep increasing. So for each ounce of physical gold, apparently there's 300 paper contracts for it. Last I heard, ever since I did this video, I heard now the number's up to actually 500 ounces of paper for that 1 ounce of gold. It's an irrelevant number, but it's a huge problem because the larger that number gets, eventually it blows up. Okay, because you can't have something go on forever. And so, could it get to 1,000 per ounce? Maybe. I don't think it will. But the point is for each ounce of gold, each ounce of silver, at some point, you can't keep increasing the amount of paper position against it because the system cracks. And so what is the magic number? Who knows? Because it's an irrelevant number. But so I look more to cycles, and all I know is that this cycle it's about to change. And with the bottom in on gold, bottom in on the mining stocks, the bear market's over. For 5-year bear market completed. So now we have a bull market breaking out or beginning to just break out. And as it breaks out, there's going to be a reason. So all it's missing is the reason, which is, and we'll find out what it is soon enough. But the cycle is telling us that, that 300 position is, or $500 positions to 1 ounce is going to break. And for the concept is nothing can go on forever.
You've also said that, the whole derivative market is going to end this year, the 1.5 quadrillion derivative bubble. Did you want to discuss a little bit more about this?
Well, sure. There's another slide that we have, but basically it shows it's got 3 bubbles on it. And, so the first derivative bubble was in the year 2000. It burst, markets crashed. And then nothing went away. They just repackaged it and boom, you have the next derivative bubble formed, but now it's 2-3 times larger. And then that was into 2007. That one broke. And then on that one, that was both the stock market and the real estate bubble, and so you had the crash. The first one was a dot-com bubble in the year 2000. So the second bubble occurred in the year 2007. So you have the stock market and the real estate bubble. And this time around, none of it went away. Okay, and as I illustrated earlier, it's sitting under support. So support is now resistance. The market's never got back up on top of the wall. And so it's sitting under support. And the problem is you've got a derivative bubble, which is now multiples higher than it was in 2000 and 2007. It's just carried forward. And so now we have this massive bubble. And this break is going to be, what I'm seeing is now it's going to be a definite stock market break. And I believe the dollar is going to go with it. And that's going to be just a huge problem for the world.
A lot of people are thinking that while the Fed plans to increase interest rates more this year, a lot of people are thinking that they actually won't. Now, do you see that the Fed, if they don't raise interest rates, let's say, and maybe even do some more quantitative easing, do you see them being able to prevent the stock market crash and derivative bubble crash, or, postpone it a couple more years? What are your thoughts?
No. Whether intentionally or unintentionally, the market crash is coming, and nothing will be postponed. The cycle goes back years, hundreds of years, so nothing will be postponed, and it's coming. So regardless of any intervention or non-intervention, it's an irrelevant issue. The cycle will complete.
All right. Well, Bo Polnny, thank you so much for joining us today. I guess, did you want to give our viewers your opinion on how people can protect themselves from what's coming? What are your thoughts on that?
I think the most important thing is to understand what's going on. Listen, get educated. On our webpage, go to our webpage. There is a video I made in December, and it's everything I illustrated. There's actually interviews I talked about as well too that we've done. Listen to them. It's about getting educated on what's going on, and you're basically if you want to do something financially. I personally believe that when you own gold and silver physically, you are basically protecting yourself and your family. So by having physical metals, regardless of what happens to paper assets, the one insurance policy that you hold will flourish starting this year, and that's called gold and silver. But get educated. Watch our videos. There's a video on our webpage for 20 minutes, completely worth your time. I think you'll really enjoy it. But it's get educated and do something, because there is very little time left.
All right. Well, Bo Polnny, thank you once again for joining us. And did you want to remind our viewers where they can find you on the internet? Yeah,
just my webpage is gold2020forecast.com, and our YouTube page is Gold 2020 Forecast as well. So please visit both those places, and I wish you and your family well. Elijah, thank you for having me here, and God bless.
This video was brought to you in part by ReluctantPreppers.com. Click here to watch Reluctant Prepper's latest interview with Glenda Lehman Irvin. For over 60 years, off-grid living suppliers Lehman's Hardware has been helping people who want to live a simpler life. A true pioneer as preparedness and self-sufficiency outfitters, Lehman's has been around since before prepping was even called prepping. Glenda Lehman Irvin, Vice President and Head of Marketing, joins Reluctant Preppers to answer the common question, what should I do first to get started prepping? Lehman's expert staff help each person consider their individual situation to find their own simple answer to this challenge. A heartwarming dose of experience, wisdom, and positivity, this interview restores preparedness to its family-centered place on the journey to simple living, which will leave you glad you listened in and wanting to share this interview with loved ones.